Welcome back to PCNC. I'm Lenny McAllister. We're talking about the economic numbers that came out reflecting what transpired in August 2015 here on NightTalk. Get to the point. Lou, I want to come back to you because you brought something up before we went to break, saying that basically based on the birth rate in our population, we should be growing jobs at about 250,000 a month in order to keep up with what we need as a country. It's interesting because part of what inspired my starting point in the phrase, the new superb, is the fact that there are economists now that say that to keep up with the unemployment rate, that number should be as low as 33,000. So what I want to know is, how do we get from some economists saying that it should be at 33,000 to keep up with the current pace of creating jobs, so 173 is still not that bad at all, and then I hear other economists give a number at 250,000, knowing that 150,000 was the standard 20 years ago when our population was smaller.
Correct. And there's no question, I find it very hard to believe there's any way we can grow as an economy with 33,000 jobs.
And I felt the same way.
Yeah, I just don't see it, because you have, starting back about 18 years ago, which is where you start looking at people coming into the workforce, there was a birth rate of approximately just under 4 million people. Today it's as of last year, it was 5.2 million. Because we have a bigger population. We have 312 million people in this country. I mean, even if you use that 1.7 number for children per family, it's still going to grow pretty fast yet. And as there's more and more 18-year-olds, there's going to be more and more children from 18 to 35 being born to those parents. So your population is just going to simply get bigger. And that says nothing about immigration. There's lots of discussions about opening the borders up and things of that. I mean, you read about that one practically every day.
So, Risa, what number should we be looking at? Because again, you know, one of the things about what Lou said is, if we're a bigger population, and we're more competitive now in 2015 than we were 20 years ago, and we still were using different numbers then than we are now, what should we be looking at when numbers come out like they do today? The stock market reacts negatively, and yet we're told everything's okay. We've been hearing this for quite some time from, let's be honest, from both sides of the aisle, whether it was Bush when he was on his way out or Obama since he's been in, and the average everyday American on Main Street can care less about the record numbers that we saw on Wall Street. They still don't feel good.
So I don't know if 250,000 is the number, but I think we have to be careful about interpreting the number, the 173,000 that came out today, because just like any economic statistics, this is going to be revised. So June and July, the numbers were revised
up.
Right, up. So in June, it went up 14,000. In July, it went up 30,000. And then historically, August numbers tend to be coming in the lowest than the expected numbers. Okay. So I read a report by, I think it was economist by Deutsche Bank. They actually said that the August numbers tend to come in on average about 61,000 below the expected numbers. So we have to kind of keep in mind that possibly, I mean, the revisions could be revised down as well as up, but possibly most likely these numbers will probably be revised up. And I think the Fed is going to be looking at where that number is going to be, because I think below 200,000 would still be like sort of the uncomfortable range to experience a rate increase. Okay,
but here's my thing. And I'll throw it to Nan first, and I'll take it to the whole panel. We're still looking at, if that's the case, let's say that's baked into the cake. We understand that these numbers may be revised up. They've been revised up for the last several months. They will still possibly break 200,000 for the month. At the same time, we're still watching Wall Street have the reactions that they've been having over the last week and a half. That's number one. Number two, the American consumer, as we're starting to get into the fall, school year starting up, and that spending drive is there, Nan. We're not seeing the manufacturing numbers going in the way we want them to, and that has to have some type of fears, because it's not just building bridges, building buildings. It's also bakeries and things along those lines that go into the manufacturing numbers. And if small business is going to be taking a hit in the fall, what could we possibly be looking for when it comes to that big spending season in November and December? And if that's the case, as a consumer-driven economy, where does that leave us for the rest of 2015?
You're right. Actually, didn't look at the consumer spending number for the new season, but if that number has been down, that's really a big worry, because I've seen a lot of big sales from the retailer, and that actually pose some kind of warning sign. Even if I don't look at the numbers behind it, from their action, I can tell they do want to sell more, meaning by lowering down their price, that means there is a potential of a slow consumption. If it's not there, it's coming. So yeah, I do have the same kind of worry and the question that you have.
So if that's the case, and that seems to be the economic storm that we're looking at, everybody, if there are concerns from the consumer aspect of this, to me, again, the manufacturing numbers are down. I can care less about what's going on in food and service. It seems like that's what's always sent over to us. If manufacturing's down, if jobs seem to be down, if Wall Street is very unstable at this point in time, and we're starting to head into a season of spending, Lou, you know, what is that going to say for people that are looking at their 401ks? What is that going to say in regards to the housing market? And if we're really hearing this talk from the Fed as far as raising the interest rate, that has to crush the shrinking middle class as it is, let alone scare investors, pull back more, and it seems to lead to a possible tumbling effect more than anything else.
There's no question, there's not a lot of job wage growth, okay? And we're going to struggle, okay, as a society if there's not job wage growth, because what it means is the middle class is not participating in this wealth effect. Wall Street is struggling now, okay, but it was struggling before a little bit. When China devalued its currency is when all the chaos started happening 3 weeks ago. And actually, here's an important point. We're actually not down as much in the stock market than we were from 2 Fridays ago. Okay, so you know it's improved a little bit, but you can't tell when you got 3% moves one way and then 4% the other way and so forth,
swing.
up and down, up and down, and you know it's your typical roller coaster. But where we see when we're looking at these numbers, okay, is just not a strong economy. We struggle to believe that the Fed believes they can raise interest rates. If they raise interest rates, they've talked about it for a year, okay? And so maybe they might, just because they want to push the economy up and say, here's a vote of confidence from the Fed, we'll raise it 0.25%, and maybe it'll go, okay? But however, if they start raising it at 0.25%, this meeting 0.25%, next meeting 0.25%, and historically the Fed has moved in minimum of 3 moves, okay, which could be very scary to the stock market. Maybe they're better off just raising it 0.1% this time, 0.1 next time, and 0.1 the third time, and just say we're going to go really slow here and get people acclimated to the fact there will be higher rates, just like when they had quantitative easing 3 times, and you know we gave a little seed money to the economy and so forth, but in the end it wasn't working out. It was really just going towards buying stocks.
And we're going to continue this conversation. So where I want to go to next is talk about this wealth effect that Lou just mentioned, as well as what does that mean for the everyday American if the interest rate goes up, especially those that don't seem to feel the recovery as much as we are told that there is a recovery. Don't go anywhere. We can continue to talk about these economic numbers next on Night Talk. Get to the point.